from Hudson Valley Bookkeeping, and in this video, I'm going to show you how to create a budget for your private practice. All right, let's get started.
Okay, everybody. I am going to talk to you today about budgeting for your mental health practice. I pretty much disagree with most people regarding budgeting, and we'll talk about what I think, budgeting really is for. Okay, everybody, let's talk about budgeting and why are you budgeting for your solo mental health practice, right? First off, I think most people get the idea of what the budget is for and why we would budget. The main thing I think for someone who's in a solo practice is that you need to be gauging most of all if you're making enough money. And the only way you're going to know that is if you're tracking your income and you're keeping up a QuickBooks. And I think it's 1,000 times better to keep up a QuickBooks than it is to try at end of month, try and work an Excel spreadsheet. Because in the end, you can automate a lot of the items in QuickBooks, and thus you're not going to actually spend the same amount of time as you would. And this is something we can reconcile, which means we prove it to the bank so you know your numbers are right. Because all I ever see with spreadsheets are lots of mistakes. Okay, so first thing you need when you want to make a budget, let's say you're going to make a budget for 2025, is you need to have numbers from 2024. It's very hard to create a budget if you don't have prior numbers to work off of. Then you're just really kind of pulling it out of the hat, right? Okay, so first step is you should analyze basically your monthly average of income. Where's my glasses? Okay, so you can see here that the total revenue for the year is $716,965.52. It's a big guess, but I'm going to first show you one way, and then I'll show you a second way. But if you don't have QuickBooks, I would highly suggest you get QuickBooks. But then second of all, the other thing you could do is pull your tax return and or just pull 3 months of your bank statements. So let's see. You can base your budget so you could do it on your QuickBooks reports, prior year. Your tax return, or 3 months bank and credit card. You're going to need everything, however you spend money. Because the main thing what you're doing is you're looking for the average. Here's the second part that everybody gets wrong. They try and make these budgets in QuickBooks, and I have been using QuickBooks since, I don't know, 1998, so a very long time, and I don't believe in the budget in QuickBooks. It's too rigid. And the thing is, if you're a solo practitioner, you probably are cash basis, and also, like, you may pay your malpractice insurance, you may pay it in full. So every May, you maybe need to budget for $2,500, $3,000, whatever your policy is, right? So that's a good thing of budgeting, is like planning for certain expenses that hit at certain times of the year, right? But that you kind of lay in after you figure out your other expenses. So let's look at this profit and loss it's a demo file, but it will explain to you like what you're trying to figure out. You're basically looking for the average of each month. So we could even say here, if we're trying to figure out our income, so first we'll say income. And like I would look at it more granularly as well, but it says we have $716,965.52. See if I can copy that. Okay, so we'll say that equals divided by 12. So you basically to stick with what you did last year, need to make at least 60,000. Here's the thing. This is 2024 numbers, right? And this is a monthly, like a monthly average. You should shoot to make more than you did the prior year. Now, who will not make more, or why would there be issues where you wouldn't make more? One, if you're fully booked, right? If you're not accepting new patients, if, you literally have no more time and you feel it's impossible, then you're not going to be making more money by adding patients. So what are the other ways that you add money? You are going to need to make sure you're raising your rates every year, because there is inflation, and inflation is pretty high right now. So everyone else is going to be raising their rates on you, your utility company, your internet company, your website. Everything I get, I'm always getting emails that the price is going up. So if you don't raise your price, then you are going to be making less money in 2025 than you were in 2024. So just always keep that in mind, and always do small price increases so that you're keeping up. You can't wait 5 years and then realize you're drastically behind and you're losing money and then increase people 30%. Anytime I get something from software company where they're raising me 30%, I cancel them. So that is something to think about. Okay, so when we're creating our projection, we're going to go back here. Like I said, I'm going to base this off of a QuickBooks file, but you could also figure out your averages and throw them in a spreadsheet for 3 months, and that'll be good enough to get you going. The main thing to me about a budget is trying to figure out how much does it, one, cost you every year, bare bones, how much is it going to cost you to keep your practice running? And you need to know that number. Now that is what a budget is good for. Projecting, like knowing how much you actually spend, and there's literally nothing you can do about it. You cannot, run your practice without certain expenses. Okay, so I have other videos that show how I believe if you are collecting, if you take insurance, I think you should post it as it comes in. If it shows it when you're in your bank transaction window and you're adding deposits, I believe this will pay for itself over and over again if you break it out by the insurance provider. And then there's also ways to make a lot of great rules so that these are auto posting. But what you'll find is it's really important that you break out your insurance income. One day you will be able to look over year, and you will be able to notice a trend if one is higher than another, or if there's a problem with your biller. So I talked to a lot of people and the numbers don't jive, like what the biller says they're making and what they're actually getting in the bank. So if you actually could say to your biller, how did you say that I made $10,000 from AARP? I literally only got $2,300 in 2024. That's a huge red flag. And you would not be able to say that or look at a 1099 from AARP, and the 1099 will probably be very close to your deposits. But if your biller is saying you made $10,000, now you have a biller issue, which is quite common. So to me, instituting this sort of bookkeeping is just really good ammunition to be really on top of your financials. And I think if you're watching this video, you're trying to get on top of it, right? I understand that accounting and finance is not usually the wheelhouse of someone in mental health, but this is your living, and you want to make sure you're doing as well as you can. Okay, so that's my rant on that. But again, you could start to see if there's a problem, and or like, why is this month really low? So I had this with a mental health provider who was a client of ours. I was looking at her financials, and I believe to review it like this month over month, and she had like no income in 1 month. It was really low. And I called her up, and we had like a Zoom, and I said, I'm really concerned. What happened? What went on? And she's like, I was gone for 3 weeks, and I didn't do any of my billing. So all of it, is in the next month. But it was a big red flag. If her income was so much lower in 1 month, that could be a red flag that your biller didn't do the billing. maybe you didn't do the billing, maybe things are getting denied, right? There's multiple reasons why. So that's where I would take an average. So now we have our average here, but I would say we would want to make our 2025 budget, like you could say, I want to increase, you want to increase at least 5%, right? 1.05. So we could say that is, we're implementing a price increase. You really need to go over your, your fee schedule with all your patients. Everybody is expecting you to raise your prices. When I was a bookkeeper, as a solo bookkeeper, I was horrible about raising prices. And it was, especially there was the Great Recession and I wouldn't raise prices. And then sometimes like a couple of years later, I would finally raise the price and client's like, I've been waiting for years for you to raise a price. Like, that's such bad business, Laurie. You should be raising your price yearly. So just keep that in mind, because if you're not raising your prices, you will be making less money each year. Okay. I'm going to show you, I'm not going to keep doing that one by one. I'm going to show you how, if you have QuickBooks, how you could export it, and we'll make a budget another way. But I want to go over a couple more things to budget for. So again, you need to plan on these rates going up. So like outside billing service, that's usually like a yearly contract, maybe 2 years. So maybe the next year, the issue is it's going to go up 5%, right? So I'm going to show you how I would export. I do not create budgets inside of QuickBooks. I don't believe in them. I think it's way too rigid. So let me show you how I would do this. I'm only going to export 1 month. So then you can do this, and I use everything in Google Sheets, especially for this. Okay, so let's take 1 month. You could do a thing and do an average. I'm just going to follow it this way so you have an idea, because these are made up numbers and they're all basically an average anyway. So let's just say that we decide that you're going to do like a month. First, you're going to do a month. We're going to use these numbers to help us come up with logical numbers based on fact, based on what's happened in the past. Not just like numbers. I've seen more people create budgets where they just literally make up stuff. They literally just come up with it out of nowhere. So let's say out of the copay, we're going to hope that we go up 5%. Now the insurance could be tough. I mean, another way to, right, and I know some of you are going to get mad when I say this, another way to make more money is to not take insurance. Okay, so then I'll sum this up. And then we know that this is a decent goal, right, for our income if we need to go up 5% each month. So then when you are running your profit and loss, what you're going to do is each month see if you're hitting that or exceeding it, because you will have months that kind of go up, and nothing is like nothing works perfectly like linear. All right, credit card discount fees. This is an interesting one. Now, your credit card, if your sales go way up, right? If your patient fees go up and you take more credit cards, plan for this to go up. So as you're trying to figure out, how am I going to have more revenue? Okay, so we're back. So I have built this spreadsheet. We came up with, and I would just leave this, you could hide it later, but this kind of shows you why did you come up with your new estimates, right? And this was numbers, we pulled December. You could figure out averages. You could look at your bank statement. But basically what you're trying to do is come up with your monthly average of what it generally costs you. Okay. Then we just took our monthly estimates and multiplied them by 12, coming up with our new totals. Okay. So now you would need a month to really happen. And then you would go to QuickBooks, you would pull your numbers and you would add them in, and you would do this every month. Because basically you've projected that you're going to do $768,000, almost $769,000 in income, and you're going to want to know if you're on track. So let's say that in this one you had a really good month, and I'm just going to use, you know, I'm just going to make stuff up so you can see what it'll look like. And then you'll have to format each time. Once you get it formatted, I mean, the thing with Excel though is you've got to check your formulas because they can get, why did that go there? Why does that say that? It should be January. Okay, so our month, I didn't break it out into each insurance company. So you did $67,700. Your credit card discount was that, and your outside billing was still $450. Oh, and then you can start carrying your formulas over. I'm just building this as we go, so you would actually know how to build one. Just be careful with the autofill. Okay, so let's say Simple Practice didn't change yet, but it's gonna. I'm just kind of throwing in some telephone, internet, and cable. Say it is around that. And some things aren't going to change or go up right away, right? Like I'm warning you and telling you to plan for it, but it doesn't mean it's going to happen right away. So some of your expenses could come in a little lower for a while until the increase actually happens. But this way, at least you're planning for it. And you're only reporting this basically, right, to yourself. But the most important thing is I'm going to show you how you track, are you doing better or worse? Okay, so here's our income. Let me just freeze this. So this way, when we go here, we can still see the top row. Okay, so for January, gross income was $67,700. We're hoping to do at least 64, so that's a good month. Then these are kind of like expenses you can't really, credit card discount, the more you do in business, the higher that will go up if you take credit cards. And then your outside billing service, so forth. Okay, so then we would figure out our gross profit, take away the $850. So that's our gross. Then we have our expenses, directory and listing, office. So actually I see I screwed that up. So total would be this one plus this plus rent plus utilities. That's why I don't like Excel. Okay, so total expenses are that. So then you would go up here and take gross profit, take away all of your expenses. So your net income is that. So like, look, I have to fix this one. This. So that's my total expenses aren't right. Because I had one thing up here. Just want to check this because this is why I don't like Excel. But it's good for this. Okay. Okay, so let me also freeze this way. Okay, so now I'm freezing this because as we go and look to our budget on the right, as all of these months happen, you're going to want to look to the right. Okay. So now here we have our January's inputted, right? So now we'll need to sum all of these because this will be our 2025 total to date. So what I'll do is I will just go from this across. Like budgeting it's not easy. We're gonna click sum. So right now it's only gonna say where I'm at for January because that's the only one I have inputted in. And then here I'm not gonna do all those other ones. The other thing I would say is like don't make your budget too detailed, like lump things together. Oops. In not-for-profits, we lump lots of small codes into one. So just remember that. You stop it right before where you want to sum it, and then you click sum. Okay. Okay, so then you just keep going because we're going to do January. Okay, so now I've set up all the formulas so everything will sum over. So here's the next thing. So we have totals of what we've made for to date, right? So now what we're going to do is create our percentage of budget cell. Because that is, we're only right now inputting 1 month, but as you continue to input, you'll see if you're really off or you're going out of whack, right? Because everything should be kind of a 1/12 of something unless you pay, like I said, a premium, like an insurance premium in full at the end of 1 month. So what we're going to do here is say the total divided by our yearly budget number. And then let's highlight this, make it a percentage. Take that part out. So then we can drag this down. Let's see what we have to delete. These we didn't have yet. So 1 divided by 12 is 8%. Because I was trying to figure out how to explain that to you. So if you're hitting 8% of your budget each month, that's a really good number. Because again, 1/12 of your budget is 8%. So 8.3 times 12, you're going to be at 99.6. So this is a really good goal, right? If you're hitting that percentage. Sometimes it's hard to explain everything. We don't do the totals. So in this case, we're doing better. So if you say, you know, we're just going to put up a thing, 1/12 equals 8%. So that's kind of like a guideline, right? So if you're in the 8% range, that means you're hitting budget. Now going down here, if you're going way over, that is where we would say, that's not so good. So every time for the next month, then you would keep, you would goal be around 16% because now you have 2 months in. So I'm going to pause this and I'm going to fill in another month so that we can go over how this starts to, you really start to notice if something's going on or not. Guys, now I have entered 2 months so you can see how this makes sense. I know it's boring. But if you really, budgeting is not fun and it's boring, but it does help you understand where you are tracking. Okay, so in this screen now I've entered February and we are under our monthly estimate on both parts. So now we are under where we wanted to be, right? So that would be something to pay attention to because as you enter your profit and loss in March, you wouldn't want to see this continue to go down. That is really tracking, what's happening in your practice. Okay, and then again, these are, look, the biller's fee went up like we planned. We had lower sales, so then we had lower credit card discount. And then some things stayed the same or relatively like a little more. Like maybe you had to stock up on office supplies. Your internet, cable, that's usually the same until they do a price change. Website's usually the same, right? We said the price of rent was going to go up and the utilities stayed pretty much the same. So then again, this, especially by having to put this into your budget, you're forced to look, right? And you can make this really simple, like on your profit and loss. If you really track things very granularly, I would make them into bigger buckets for the budget because it's a solo practice shouldn't have tons of categories. Okay. So now we have our net profit here. So now this spreadsheet is totaling every time. So it's the sum of all of these columns, right? So here's another thing to be aware of. So 2 months out of 12 is 17%. So what you're looking for here is that something doesn't say 50%, right? Because you'd want to be in your 6th month when you're getting at that. This to me is the biggest piece, is that you're seeing how much, where you're at. So look at this. We are at 50% here. I think this is office supplies. Yeah. So you could say in the end, maybe I was crazy and like $400 for office supplies is way too low. I wasn't aware of the fact that I was using all these supplies from my house. And now that I'm, whatever. So this could be a point where you could say, yeah, that was really a bad guess and incorrect. Other thing, and like, it's okay. Like this is a projection really, and it's to help you notice how you should plan better or understand your expenses. To me, here's for instance, a rant on budgeting. So I have a lot of high net worth individuals that come to me and they say their spending is out of control and they want to go on a budget. And so the first thing I say to is, are you willing to cancel your country club? To which I am always answered, no. So I then tell them, you're not really willing to go on a budget, because if you're spending too much, the first thing you should cut is your country club. And no one will ever cut it. Okay. So it's also the other thing, when people tell me they want to go on a budget, I say to them, so do you want me to call you on the 20th and tell you that you've already spent your allocated money for meals? Do you want me to tell you you're not allowed to go out to dinner for the next 2 weeks because you already spent what you made up in your budget? And they're like, of course not. So again, I'm not the biggest proponent in regarding budgets, in the sense that most people think. Like, you cannot come up with a hard number of what you're going to spend. Business is not linear, like I said. So you are trying to figure out where you're at. And then when you see you're at 50%, maybe you'll decide to stay off Amazon and stop buying all these cute pens and folders and wasting money, right? Because you said, I really only want to spend $400. That is what this should be doing. By watching this percentage here, you can tell if you're tracking based on your best estimate. So like, if there's anything I can teach you more than anything else, it's to build this budget like this so you can see how much. Because again, we didn't even have insurance on this. But let's go over here. And like, let's say you had to buy, something bad happened. You had to pay someone a ton of money, right? Or like you paid the whole subscription in 1 month. So it's going to tell you, like, maybe for a long time, you'll have nothing spent and your budget will be really low, right? So like, let's go back here and let's say for computer IT and software right now, you don't have any. So it's going to say you're at 0%. But then when you go to August, you're going to spend $400 because that's when that is due, right? Then you're going to be almost maxed out. So another thing you could do is play with the spreadsheet if there's certain payments you know are going to happen. You could kind of like future date some of this, right? But I really wouldn't worry too much about it. But this is really what you're looking for, is something not tracking, right? So you're just, every time you add one more month, you're going to figure out what should my average percentage be in February. So average percentage should be about 17%. Right? So income is still coming in 16.88. This is still at 17%. So you still have time to make it up. So what would be really bad is if you really start to lose, right? Like this keeps going down. Then you know you have a problem. But sometimes people don't look at this stuff and they really don't know what is going on. And they'll say, Laurie, I have no idea why I don't have any money. So another thing you could do that's super simple to see how you're doing is just look at your bank statement and see the total deposits and get like 3 of them, right? Then you're going to know like what's my average deposit in a month. That's one of the biggest things I look at. I mean, I look at my books a lot because I'm a bookkeeper, but it's still, another thing you have to do. And I know we all have a lot. So let's say in March, we were at 57,000. So if we went equals 3 divided by 12, I should be at 25. So now I know I am down 5% or 4.3% from where I should be. Now I know there's a problem, right? Because if I'm watching this, I should be at 25% by March. So as you enter these, the main thing is, to me, the budget helps you pay attention to what's going right, and then, what's maybe not going right. Because if we're looking over here and we see, look, our average monthly back in December, which we used, we could have taken a whole year and divided by 12. It's a tutorial. You can figure out your numbers any way you want. But once you're getting way down from your monthly, now that's a lot. That's 7,000 off. And then you were off 2,000 here. So now you're out 9,000. Well, that's not good, and I would be looking a lot here at what you're spending. Now, other things could happen. You might need to revise your budget, right? Like maybe you hire someone. So you're going to have to add that in and maybe come up with a yearly budget because they come in halfway through the year. So you'll figure out, what does it generally cost for this person I'm going to hire? And then, you could come up with something here, like an adjusted budget at the bottom. The biggest thing I could tell you is to work this so that you can print a P&L and post your numbers inside your spreadsheet. I'll explain why I don't like QuickBooks. Is that it wants you to keep, I've tried to build QuickBooks budgets a million times. And the biggest issue is it wants you to kind of like divide everything by 12 and put that as the amount for the budget. And you just really don't know when certain things are going to happen. And then it shows you your budget's totally wrong for 1 month when you could be totally tracking and doing fine. So the main way I want you to track is by having your year-to-date number here, right? And you can prove this with your QuickBooks, because all of these numbers, if you ran January to February, that should be your number. And then tracking, where are you at in these percentages? Because the biggest way I can tell when people are really having a problem is when they're hitting 50% in January. And I'm like, well, that was a really bad estimate. And maybe we should go ahead, revise your budget. It's yours. You're a solo practice. The main thing what this is doing for you is teaching you to look at your numbers. It's taking you into a place that you may not be super comfortable with. But it also is showing you like the cold, hard reality. If you don't make sure your income is high enough, you're going to make less money this year than last year. And nothing worse than working just as hard and then suddenly making less money. So just remember, the biggest way that I like to come up with a budget is to look in the past. And even if you just use bank statements and start, a simple spreadsheet of like, here's my rent, here's this, so forth, then you'll be able to kind of come up with averages. And averages are fine. Take that average, multiply it by 12, make yourself a budget. Then create your spreadsheet and fill it in once a month. I'll just download this for someone you can import it and like play around and add in your other numbers just to kind of like see if you want. But like I said, the main thing is that you really want to be, to me, if you're looking at a budget, it's one, looking for spending you didn't even know you were paying for it. Or is it redundant? Are you paying for 2 softwares that do the same thing? I know someone who has 3 billing softwares right now. So that's definitely redundant. Just anything like that. So I would recommend, one, if you don't have QuickBooks already, I think you should start, because you will thank me in 2 years, because then you'll be able to run reports really easily about like how well you're doing in your current year versus prior years. I do this a lot with one of my clients that's in sales, and we look at it on a monthly basis. It helps him kind of keep his eye on the ball and not get too relaxed. So I hope you found this helpful. And if you're looking for
mental health bookkeeping, you can always reach out to our company. We specialize in mental health bookkeeping, and I also do QuickBooks coaching for mental health professionals. All right, have a great day.